Taiwanese index is down 0.7%.
Compared with the peak of FY19, in FY21, we saw almost 50% growth or decline from the top.
While the market's been very strong, just in the last couple of days, it's shown some fatigue signs.
The market probably is going to become more focused on the economic weakness as you go into 2023 rather than inflation.
The Nifty is down only 61 points.
I think where we stand today, one can comfortably say that the next 10-year growth rate is going to be better than what we saw in the last 10 years.
One big pushback I get from all my clients is that at now India is benefiting because it is not China.
We understand that Mankind Pharma is in the process of the DRHP, and most likely, this particular IPO will come into fruition within the next 2 months.
I think consumption levels have gone very, very good. As compared to 1920, the growth levels across India, if you see retail per se, if you see all the numbers, they are at 20-25% over 1920.
Nifty sitting with cuts of around 270 points.
Good afternoon and welcome to Closing Bell. I am Manoj, with me Prashant in the Mumbai studio, and the markets, the signs were there, but were the signs there for this kind of a day? Perhaps not. Hand on heart, nobody would have thought that the market would fall the way it's fallen today, 325 points. And tell you what, in the process, it's taken out some really crucial levels. It's still last hour to go, and you never know with our market, the last hour could really go anywhere. But the Nifty is trading below the 20-day exponential moving average. It's trading below the Wednesday low. Wednesday low, in fact, was broken quite convincingly in the morning first hour itself. I am watching out for now the Bank Nifty, because that's really been the index which has been carrying the market, and that's now right between that 5 and 10-day exponential moving average. But the big warning sign today has come in the broader market. Look at the advanced decline. All through the last 2 months, even on weekdays, the advanced decline was very strong. But now you have advanced decline which is at 1:6 and counting. So the big question is this the big global catch-up play, which me and Prashant were discussing in the morning, that the market perhaps can keep outperforming for a limited period of time, but eventually if all markets keep going down, at some point you have to participate. And let's watch out for the FI data, because for the last couple of days we've been getting sell number, and there's been shorting in F&O. Prashant, good afternoon. So today has been quite eerie.
Oh, it has been, Anuj. And as you said, we were talking about in the morning, right? That, decoupling, all of this stuff happens for some time, but eventually you can't have very large divergences like what we have this year, where, the US is down 18-19% and the market here is up 4% in local currency terms. Dollar terms, of course, the gap reduces a little bit because, the market here is also slightly lower in dollar terms. But then, even compared in dollar terms, the gap is substantial, and that really lasts. These episodic outperformance zones happen. It's happened in 2018, it's happened in 2015, it's happened in 2007, it's happened in 2002. But broadly, things catch up. Sooner than later. Is this the beginning of that catch up? We will see. I have to say, though, there is no real panic or anything. I've spoken to a bunch of investors. The point is, these are pullbacks. Given the ferocity of the moves higher, you're seeing pullbacks across the board. And that's how this is being viewed as of now, unless, of course, this starts to continue. One other feedback, and Nimish, of course, will be able to give us a better sense in terms of dealing rooms and flows, etc. And it's been evident. Last couple of days, FIs have come back as sellers, and that is no different today as well. So FIs have turned sellers again. That's the general feedback that I got speaking to a bunch today. All right, let's get you what's lined up here on the show. We have stocks which have taken a knock after continued global weakness. It's hurting IT, auto stocks which are leading declines. Healthcare stocks are showing some amount of resilience. Today's trading session will see significant activity from passive funds and adjustments in Sensex and FTSE global equity indices. So that's the impact we'll outline for you in a bit. We'll take stock of the volatility in the market and the top sectors to remain invested with Chandradeep Singh and Varun Daga of Giri Capital on Alpha Managers segment in a bit from now.
Okay, but first up, as always, the market, by the way, is trying to recover now from the lows. So just keep an eye on that, whether this recovery lasts or not. But The financial Nifty index is trying to lead the recovery once again. There it is, as you can see. But because the decline has been so sharp, it doesn't look big, but from the lows, there's a decent recovery, which is on right now. Mitesh is joining us for last hour calls. First up, Mitesh, hi, good afternoon. Bold from the blue really for the market today. But your sense of how things have turned and whether this is some kind of a trend reversal or is the trend still largely on the upside? And how are you approaching it now?
So, morning, Anuj. I think, good afternoon, sorry. In the morning, Anuj, we were talking about the fact that I don't want to buy this dip, purely because the intraday indicator was slightly on the shakier ground. My understanding is that this is a short-term or an immediate-term trend which has turned corrective, but the medium-term trend remains positive, which means that basically you'll have a stronger pullback than what you've been having for the last couple of days or weeks. So we talked about 17,500 as one of the target areas. I think we have hit that. In case we start breaking to today's low, then I think, the 17,400 was a gap area will come into picture. But I think broadly, then this market could see a slightly deeper correction to about levels of 17,150 as well. So I think that's the worst case scenario, which I'm assuming. I think overall the trend still remains on the upside on a medium-term charts, but the immediate trend is on the negative side. So in that sense, I think, traders have to possibly lighten up, wait for a bigger dip to buy into. And till then, I think, the market will be choppy, volatile, and slightly biased on the downside. On the stock front, I have a sell on Petronet. I think that's a stock which is slightly breaking down. That's a sell with a stop at about levels of 215 for targets of 200. And the other one is Power Finance Corporation is also breaking below key support averages. So that's a sell as well. Keep a stop at about levels of 116. Look for targets of 107.
All right. Mitesh, thank you very much. We'll come back to you in a bit. There's a decent bounce which is there. We'll see how far it goes. The bounce started, I'll tell you exactly, at 225. We were at 17,512 and it is already about a 70-odd point bounce from the day's low that we have seen. So we'll see. Deepan Mehta is director at Elixir Equities. He's joining us right now to take some questions. Deepan, great to have you with us here. Thank you very much. How are you looking at the screen today, and any thoughts at the price action so far?
Yeah, good afternoon, Prashant, and thanks for having me on your show. Yeah, actually, I'm watching the market and with surprise at the correction which has taken place today. But I heard your initial commentary and I agree with you that there can be only so much of decoupling. And at some point of time, I think corrections in global markets are going to catch up with us, and that's what's taking place. The most disappointing aspect, of course, is the FI figures have turned quite nasty and negative in quite a large quantum. And that certainly is never a good sign. But I think if you're a long-term investor and you're looking at a 3 to 5 year type of a view, I think these are great times to buy gradually into good quality businesses. Typically, when the market starts to rally, you never really get a chance to get into these companies, but these are good opportunities. Something which has fallen maybe 10-15% from its recent high, maybe a good entry point and provide some margin of safety.
Okay. Well, that's on the Nifty. There's been a decent enough bounce that you're seeing. Even the mid-cap index and advanced decline seeing a bit of a recovery. With our market, the last hour has really been crucial, and so many times it's staged last hour pullbacks. Is the start of something big? We'll find out. In terms of other stocks, Deepan, hi, good afternoon. What clearly stands out today is selling in consumption names. Consumer is something which was leading this market. And if you look at the top 5 or 6 losers, they're mostly consumption names. Tata Consumer, Hero, Mahindra and Mahindra. Your view?
Good afternoon, Anuj. I think it's more to do with the fact that the stocks which have rallied the most, that's where the selling pressure is coming through. And I wouldn't rule out even local traders, investors trying to book profits over there or maybe cut their losses in these companies. And these are the favorite companies. They've been reporting good numbers. The commentary has been positive. The outlook for the next couple of quarters in terms of earnings were great. And in a way, I think a few weeks ago, there were good trading opportunities. And some amount of sell-off is taking place on account of lightening of positions by the traders over there. I don't think we are seeing any material institutional selling in these counters, especially not of the long-term nature.
Okay. There are some technical changes in the Sensex and FTSE indices which will take place. Vivek has been, of course, tracking that. He's joining us again to recap the changes and the flow-wise impact. Vivek, over to you.
Well, that's right. So today's trading session, we are actually seeing quite a bit of activity, especially among the names that we'll be highlighting. Now, the main reason for this particular change and the increased volume activity especially is the fact that we are seeing quite a bit of changes as far as the FTSE index is concerned, and also some weight changes in the Sensex. So now, remember, these announcements were done prior. The FTSE announcement was done exactly 1 month ago, and the effective date is Monday, which means that the adjustments are being made in today's trading session. Sensex, the announcement was made last week, and it's going to be interesting to see, how exactly these stocks stack up after the adjustment comes into effect. So some of the buy flows as far as the Sensex is concerned is in Kotak Mahindra Bank and IndusInd Bank, while sell flows are in SBI and HCL Tech. When you're talking about the FTSE, these include inclusions, exclusions, as well as weight changes. Some of the key stocks that are on the radar are Indian Hotels, CG Power, Gujarat Fluorochem, Schaeffler India, Linde India, as well as Motherson Sumi Wiring, all of which are seeing buy flows in today's trading session. India Bulls and Tata Power are seeing sell flows. Remember, active fund managers typically have positioning into this particular stock as soon as the announcements are made, even do a little bit of pre-positioning. So don't be surprised if some of the stocks you see are reacting quite opposite to the flows that you're seeing in today's trading session.
Thank you very much for that. I mean, those are adjustments which will take place, but largely, as Vivek also pointed out, technical in nature, one-time kind of adjustments, no more, no less. Let's just take a quick look at the broader market space and see where else we are seeing activity. Vedanta is down 7%. I mean, this entire tire space which went up like a rocket yesterday, and I was scratching my head wondering what's going on. I mean, they were being bid like, the market for tire stocks is going to not open today. MRF, Apollo Tires, Tata, Balkrishna Industries. I can't spot CEAT with any large cuts, but the ones I mentioned are down between 5 and 6% on some of the highest volumes so far. Any thoughts, Deepan, on these tire names, if you like any of them? And then do comment, if you will, on Vedanta as well. There's been a bit of flip-flop in terms of where this investment is going to come through in the listed entity or at the holding company level. So the market doesn't like that.
Yeah, Prashant, let's go with Vedanta first. And that's why, I think the market has this issue with corporate governance standards of this particular management. And again, those issues have cropped up over here. Technically, I think all Vedanta's businesses in India, or rather the group businesses in India, are in Vedanta Limited. And even at the recent investor meet, there was a lot of excitement around this particular semiconductor. And at that point of time, it did appear that it would all happen through Vedanta, the listed company. And now this particular step of the management certainly has not gone down well. And as I said, I think, that with Vedanta, they have a bit of a history as far as corporate governance is concerned. And this certainly doesn't help the interest of minority shareholders. Coming specifically to tires, yes, even I was surprised with the up move which we saw over there. And the best pick within the space still remains Balakrishna Industries. If you have some kind of opportunity, or rather, I would say, contrarian investing strategy, then Balakrishna certainly, is a good stock to look at. It's corrected significantly, and last couple of quarters have been a bit disappointing because of the way Europe and US markets have shaped up. But once the markets start to turn around over there, given the expansion and the backward integration which they have done, I think they are well on their path of increasing global market share from 6-7% to 10% and maintaining that consistent 15-20% type of bottom line, top line growth rate, which we have been seeing in this company. So very positive only on Balakrishna Industries. Other tire stocks I would avoid on account of competitive pressures. And overall, I think pretty patchy track record per se.
Okay, well, by the way, the bank Nifty has now recovered over 250 points from the low. The low was 4502. Now 4600 was that zone of 5 and 10 day exponential moving average. Now it'll be interesting to see if this recovery can continue, or there's some selling, which comes back on this recovery. The other space to track, of course, is IT, and a couple of them which stand out. TCS, which is down 2%, and Emphasis, which is down almost 4%. I'm pointing these two specifically because they, I believe, have exposure to FedEx, which is something we had discussed in the morning as well. So maybe, that's Emphasis, not Infosys. Emphasis is the stock that I was referring to. Deepan, your view on some of these IT names, and we're getting very close to 52-week lows on most of them.
Yeah, that's right, Anuj. I think it's quite disappointing. But, in about a month's time, 4 weeks or so, we'll be into another earnings season. And we all are going to quiz these managements as to what the demand scenario is. I think until the con calls of the last quarter, they were pretty confident that there is no major disruption or no major pressure on demand. But let's see how this quarter has shaped up and what response they're getting from their customers. And by and large, I think the industry has got great long-term prospects. But yes, I think you will have to see this patch of underperformance or correction for the next maybe couple of quarters or so. But when things turn around, they turn around so well, and you don't get a chance to buy into these companies as well. So I'm remaining invested in Infosys, TCS, Tata Elxsi, some of the names that we own, and riding out this particular bearish phase in them, and hoping that if we have a slightly longer term view, these companies can still deliver decent outperformance over the Sensex and the Nifty.
Okay, well, for now, let's discuss a couple of stocks that we normally don't talk about. It's SJVN and NHPC. Basically, in the hydropower space, Nimesh is joining us. Nimesh, there's a very interesting view from CLSA.
Well, absolutely, Anujana. And for the first time, I'm seeing an influential broker like CLSA putting out a note on NHPC and SJV, and they've initiated coverage in both the stocks. And as I said, this is maybe the first institutional brokerage to have a coverage. On SJV and CLSA has initiated a buy report with a target price of 42. They believe that the stock has a potential to double in the next 4 years. SJVN, according to the CLSA note, is firm plans to reinvent itself as a renewable power, power as a service play, and with a 1.6 gigawatt of new hydropower projects and 14 gigawatts of new pumped storage projects. Look at the revenue projections that the CLS has put out. After just reporting 7% growth in the last 5 years, now CLS is forecasting earnings equity, earnings to double in the next 5 years from now, EPS to increase by 45%, and ROE to expand by 365 basis points. That's a huge number that CLS has put out. So, interesting note on SJVN, a buy rating by CLSA with a target price of 42. So that's SJVN. The second stock is NHPC. Again, first time I'm hearing getting a report from a foreign brokerage like CLSA on NHPC. They have a buy rating with a target price of 51. Now NHPC is among the top 3 leaders in the RE developers, and is one of the largest players in hydropower projects. Now, even in NHPC, look at the numbers that they are quoting about. They believe that NHPC is going to be a key beneficiary of India's net zero commitments, which will lead to a big earnings potential and earnings growth for a company like NHPC. So therefore, CLS is forecasting revenue earnings equity of growth of 131% over the next 4-5 years. With almost 7.5 gigawatt of work under construction under NHPC. In fact, they are also expecting, even for NHPC, a 45% growth in EPS and a 217% growth in ROE over the next 4 years. So they're talking about big numbers, and for both NHPC and for SJVN, CLS put out a note with a buy rating and big upsides. On SJVN, CLS believes the stock can double in the next 4 years.
That's indeed is interesting. Nimesh, first of all, we don't talk about these names at all. I mean, it doesn't come up at all. And then on top of that, for initiations like this, quite something. Let me put that to, Nimesh, thank you for that. Let me put that to Deepan. Deepan, would this prompt you to look at these companies a little bit more in terms of...
Well, I think the way Nimesh looks at really compelling stories at this point of time. And renewable energy certainly is one of the investment themes that many investors are chasing. And, a lot of money has gone into the likes of Adani Green and Tata Power per se, and even GSW Energy. I think the private sector energy companies, power companies going into renewable are getting higher and higher P multiple. And then why not these companies as well? So sure, I think these stocks can certainly do well. My only issue is the PSU tag which they have, and generally PSUs, even after 10 years and new government, so much of kind of enthusiasm and encouragement given to them. If you see on a longer term basis, they still underperform the private sector players. So you could have a trading kind of a run in these companies. They are very cheap. You can justify buying into them. But from a longer term investment, I still prefer the private sector renewable energy companies.
Okay, Deepan, stay with us. What we'll do is we'll take a quick break here. We'll come back and we'll take stock of the market once more. Down about 304 points. We are off the lows by about 60 points or so. So far there is not a extension of this move in any great way, but it's not coming back to the lows as well. I mean, 30 minutes, 40 minutes of trade still in front of us. We'll come back. We'll also have Chandradeep Singh and Varun Daga of Giri Capital on markets when we return on the other side. Stay with us. Okay, welcome back. Deepan Mehta, of course, is still with us. The market's down 280, 290 points. So that will that impulse to try and buy the dip come back again? We'll see. Next week, of course, you got the FOMC, that'll. For now, it's what the decision is on Wednesday, and I think will react to that decision on Thursday morning. And later today, out of the US, we get the University of Michigan inflation expectations data. 3-5 year expectations data, and that number is very strong. I think it'll only reinforce 75 and maybe bring about calls for 100 as well. 100, one doesn't know. The bar, I would say, is too high, very high for 100, but 75 very much in the price. I think that is pretty clear all around as well. Deepan, IndusInd Bank is seeing a real lease of life. I mean, from the day the results were announced, Q1 results, it's up almost 25%, 1230 now. Do you own this? Would you want to own something like this?
Yeah, Prashant, disclosure that we and our clients do own IndusInd Bank, and it had been a bit disappointment when the bank got into so much of trouble as far as NPAs were concerned, and it's just about playing catch up. I think the last quarter numbers and management commentary was very positive. They are now finally having industry-leading growth rates, and NPAs are well under control. I think under new management, a lot of systems also have been overhauled to ensure that they are not in the same NPA mess which they were before. Valuation-wise, there's a lot of comfort in IndusInd Bank. It is a shadow from the past PE and price-to-book earnings multiple it used to trade at. And at present, I think it's at a significant discount to the likes of HDFC, ICICI, Kotak. It was trading around the same earning price-to-book earlier, maybe a couple of years ago before the IL&FS crisis. So there's way for the PEs to get rated upwards as well. And earnings also will flow through quite nicely over the next few quarters. So I think the stock should do exceedingly well and maybe outperform the banking index as well.
Deepan, we will let you go on that note today. Thanks a lot for joining us and have a good weekend. Just see the intraday chart of Delta Corp. All of a sudden, and there's a block which happened, and I just look at that move of, with the move started at 213 or thereabout at 235, and from that point, it's moved up to 230. Massive move is what you've seen. We have our next guest joining us, Chandradeep Singh and Varun Daga, co-founders and fund managers of Giri Capital, now joining us. Gentlemen, good afternoon. Thanks a lot for joining us. Chandradeep, one look at your portfolio and it looks like clearly you've taken some outsized bets on some of the recent outperformers. I mean, of course, you may have taken a bet on them earlier, but ICICI Bank and SBI, these are the kind of stocks which are leading the market, not just financials overall, but these two financials. What's working for them? And do you think the leadership stays with this pocket now going forward?
Yeah, hi Anuj, how are you? Thanks for having us. Good afternoon to you and your viewers. Yeah, I think the answer to that is that it certainly seems that way. Financials have been leading the market, and ICICI has been a big leader for a while. Of course, along with SBI, and a host of other financials, they seem to be doing quite well. They have a significant earnings tailwind. because of pickup in credit growth, as you may have seen some headline numbers lately. Pickup in in earnings growth as a result of credit growth. And of course, we all know the health and cleanliness of the balance sheet, particularly in these two banks over the last 4 or 5 years, has been quite significant. So they seem to have a good runway to earnings growth, which was possibly not built in and now has been starting to get built into the price.
Gentlemen, hi, afternoon. Charandeep, we were just talking about IndusInd. It's of course, I mean, valuation-wise, IndusInd used to be right up there at one point in time, along with ICICI, maybe not quite Kotak. Kotak was always more expensive. Any sense in looking at tier 2 kind of names here? Because while these stocks are, of course, I mean, these companies have done very well. They've also gotten re-rated, names like ICICI Bank, etc., especially ICICI Bank. Any sense in looking at names like IndusInd?
I must tell you that, as fund managers, we like to focus on leaders and leadership. So if we feel a business, especially in financials, where there's so much paper available and there's so much supply that keeps coming by way of QIPs, well, at least it used to, it probably will again at some point. It's better to stick to the large leaders that are well owned by the institutions and well liked. We have not tracked IndusInd Bank for a long time, so I can't really particularly comment on this, but they seem to go through a similar cycle, like an ICICI and SBI, albeit much later. It was a darling of the markets maybe up to 5 years ago, and then they went through some NPA troubles. But I don't know the particulars and the specifics. We as a fund house like to stick to the leaders. Although I do agree with you, I think there's a lot of value that seems to have emerged in tier 2, tier 3 financials, which are highly ignored. I've seen banks with balance sheet sizes of 1 lakh crore trading at market caps of maybe 4,000-5,000 crore, and their balance sheets have been cleaned up. So for a stock picker, it's a delight. I think there's a good environment out there to go look for some of these where one can make a case of earnings picking up.
Okay, Varun, good afternoon. The other pocket which stands out is autos, right? And you have a stock which has actually done remarkably well, reclaiming its old glory, which is Eicher Motors. What, to your mind, is happening in this space, and is it now getting into a bit of an overcrowded trade? It was, 1 year back, perhaps under-owned, but now is it a bit of a consensus call? You fear?
You could say that in the short run, many of these, in fact, whether it's cap goods or autos, I think there is a bit of euphoria, but I feel the long-term story still remains very intact. You could always get a little minor correction here and there, but I think if one is a strong hand, one should see through that, because I think some of these companies are coming back very, very strong. A lot of, specifically with Eicher, a lot of launches coming up. What they had, their plans to grow in their international markets. I think all those plans are coming on stream. So a lot of excitement out there. So, we would like to stay put. And of course, it's done very well for us. But I don't think the story is over. At least that's what we feel, that the tailwind in fact, the whole auto pack, the tailwind for the next 2 to 3 years is very, very strong.
Tailwind is very, very strong. I got that. Varun, what else? Have you added anything new? Have you added anything, recently, or now that the market is looking, maybe we don't know whether this is the start of a meaningful realignment with global indices, especially US. What would you look to add in any kind of drawdown situation we may have?
I think the last thing we probably added was like a Zomato, which was a bit of a, contrarian call in that sense, because I think a lot of bad news was built in the stock. Everybody was panicking with the losses of Blinkit and the acquisition. And then, of course, now a bit of sanity is prevailing. And, we saw with many of these IT companies where they had their great listings, and, especially the tech names, they had a very good listing. And then, of course, they went through their own cycle. globally, right? You saw globally many of these tech stocks really got beaten down badly. And we felt that probably this could be a good way, because at least one thing we are very clear about is that the revenue growth will come over the next many years in a company like that. It's a duopoly. We like the business, and we just felt that it was the negative and the panic was overdone. And but we need to still watch out for delivery. We would want that it should deliver, and it should get into it needs to start making money. So that's important. But I think that's a big bet we took, and it's done well for us. It started right after buying, it started doing well for us. So, and for us, we've been completely out of otherwise IT, right? We have no other IT stocks. Of course, this is a consumer tech stock, so you can't relate it to IT services. But we are completely out of IT services, and we've been out of it for a very long time now. So, we thought this is a good space to play it by getting into a consumer tech stock like a Zomato.
Okay, by the way, the markets, the bank Nifty is seeing some decent recovery, and that's what it's been the go-to pocket. So maybe I don't know if the low for the day has been made or not. But if you see the Nifty and the bank Nifty from intraday lows on the Nifty now, we are almost sitting at 65-point recovery. But on the bank Nifty, I think that's where the recovery is more pronounced. The low was 4,502. And we are at 47.91, so almost a 300-point recovery on the bank Nifty. Varun, since you referred to delivery, Charandeep, let me take up the next theme. Blue Dart Express. It's a stock that you're backing. It's quadrupled in the last 1.5 years, right? Is this a sectoral bet or a company bet that you've taken?
It's a company bet, although I must tell you that the sector is also doing very well. Right? It's a first-order beneficiary of a vibrant economy. It's very dependent on that. So, I must tell you that, because we've owned it for a long time now, but we continue to stick with our winners. That's what's normally worked for us. Some of these look like they may have got a little expensive in the near term, but we live with that. As long as the numbers keep coming through and the companies keep solidifying their positions, retain their leadership, we don't have a problem holding on to them. Buying afresh obviously is a different ballgame. One has to be calculated. One has to take advantage of dips and better pricing wherever possible. And of course, the last thing I'd like to add is, none of this should be construed as advice, because, we have bought these in our capacity as discretionary fund managers, and they should not be construed as advice to your viewers.
Charandeep, when do you decide to sell? Is it a valuation? Do you have a price in mind, or you never sell?
No, of course we sell. I think the never sell, yes, the harder part of investing is selling. At least for us, it's been like that. In a fund, you have to be very sharp with your exits. I think we generally like to sell into euphorias. When people are building a hell of a lot into the price of a particular stock, the street is consensus bullish. So, let's, think of maybe, like the pharma cycle when it topped in 2015, and people were building in wild numbers, and sometimes that even if a little goes wrong, you could lose 30-40% very quickly. So you have to be open to booking some profits or getting out at a time like that. So you look for, consensus behavior and consensus bets. I would say, financials were probably like that before COVID as well. There were so many banks making new all-time highs. Money raising was vibrant. Everybody was raising capital. You have to have strong judgment and experience to decide if this is a near-term thing or if it's a long-term top. Sometimes long-term cycles can go on very long. You could be 10 years out of the money. Look at Sun Pharma, you're 7 years out of the money now. You don't want to be stuck in something like that. It's very hard. It's very easy for me to say, very hard to execute. But, many good quality processes strung together, and hopefully you get some of it right.
All right. By the way, I think I spoke a bit too soon. I said maybe the low of the day has been made. It might still have been there. But back to within 20 points of intraday low on the Nifty. Just look at that. Today's decline is being led by some of the leaders like Eicher Motors, Lever, for example, Infosys, Tech Mahindra, these kind of stocks doing well. Now, Varun, you did mention in passing that you don't have IT stocks in your portfolio, and you would, of course, refer to Zomato as a delivery stock or as a new tech stock, perhaps. But why is that? Have you did you not participate on the way up as well, or sort of you exited these stocks when the trouble started? And what's the view now? Are you willing to look at stocks again, given the current fall?
Yeah, a good question, because I think IT was the first sector that came up on our screener. In fact, IT and metals, I remember, came up on our screeners right after COVID. And these were the two sectors we were betting heavily on. And in fact, a large part of our portfolio was into IT and also some metals. And now we don't have either of them. We have no IT or metals because, we actually... We saw that the earnings acceleration really played out in many of these companies, and the valuation catch up really happened. So many of the companies, just after COVID were, trading at a mid-teens multiple, and then earnings acceleration started because, cost had really reduced for them. Globally, people needed more service. And their orders just picked up even more. So they got amazing earnings acceleration, margins also expanded, and the multiples also expanded. So you saw some of the companies which we held, moved up very, very well in a very short span of time. In about a year and a half, 2 years, they went up quite sharply. And, we got this sense that, everybody started, what Charandeep said, it had become like a consensus trade. Everybody wanted to have these IT companies in their portfolio. And we felt that the best time, at least in the near term, was done. Valuations were very, very overstretched. The PE multiples had become very, very, it had already expanded. And the next couple of years, we realized that the cost could come back. Your margin pressures will come back, and the earnings which got accelerated will get decelerated. So that's what's happening, is what we feel. These are good companies, great companies, in fact, but we feel that there will be some headwind in the near future, and we can see that in the price.
Oh, yeah, no, absolutely. Point taken. Varun, thank you very much for joining us. Charandeep, great to have you with us here on the program as always. Appreciate it. Well, let's look at the market and it's down. It's seeing another leg down. That bounce that we saw starting 220 to about 301 is all but gone. All but gone. And we are at what, 17,518, which means that we are down about 360 odd points or so. 20 minutes to go for close. We'll take a quick break here. We'll come back. As always, we'll tell you what's happening in dealing rooms. Nimesh is going to be joining in on D Street Chatter, and we'll get you BTSC trades as well with our technical experts. Stay with us.
Welcome back. Well, one thing which stands out is that while the Nifty is still very close to its intraday lows, the Bank Nifty is not. In fact, the contrast between the two indices is clearly visible. Even today, the Bank Nifty sort of outperformed, and from the lows, it's still up quite a bit. As you can see on the screen, the Nifty is very close to its lows. The Bank Nifty is not, and of course, as you've been pointing out, a lot of IT names going towards the lows. TCS, HCL Tech, Wipro, all have moved to low point of the day. And on the other hand, there are a couple of banks. Axis Bank, just pull out the intraday chart of Axis Bank. That stock has now turned in the green. And from the day's low, there's a very significant recovery. So there's clearly a bit of a dichotomy which is playing out, which is that the financials are relative outperformers. Look at that move on Axis, for example, at high point of the day. Let's go across to Nimesh for D Street Chatter. Nimesh, been very volatile today. You tell us, what have you picked up?
Hi, Nujana. It looks like it's a consolidation which is going on for the last couple of days, and clearly, on the upside now, around 18,000, 18,050, there is a bit of resistance on the Nifty. However, on the downside, we are pretty much close to that crucial support of 17,450 on the Nifty, so that's something to watch out. The overall feedback is only if you break 17,200 on the downside, maybe there will be some bit of panic selling. There is no panic selling, so to speak, in today's trading session. The flows are going to be all over the place because of the FTSE rebalancing. There is Sensex and the wisdom tree rebalance as well. And do remember, FTSE list was pretty much in the market for the last 2-3 weeks. So there is a bit of pre-positioning as well in some of those FTSE rebalancing stocks. So that's why I'm saying the FIDI number today is going to be all over the place. In terms of in terms of sectors, again there's a clear trend of the selling continues in the technology names. On the other side, the financials is the one space where there's continuous buying coming in. Now, after the big move in the large cap bank stocks, there is a bit of sense that maybe now people are looking to chase the down the line MFIs and the NBFCs as well. So a bit of buying is back in that space as well. But net, the feedback is we are still in a consolidation phase. No panic selling yet, and we are pretty much close to the Nifty support of 17,450, 17,400 levels on the downside.
Okay, and in terms of stocks, Nimesh, what have you picked up?
So in terms of individual names, Anuj, the first stock is Eastrip. That stock is buzzing in trade in a weak market. That stock is up 7%. Volumes are also on the higher side. Looks like there's going to be some corporate development early next week. So that's something to watch out in this particular stock. The second stock is APL Apollo Hospitals, APL Apollo Tubes. Even, this stock is buzzing in trade today. So in the mid-cap space, there is a bit of outperformance in select pocket, and APL Apollo Tubes is buzzing today in today's trade. In fact, this month, the stock is up 16%, and the chatter is one of the leading influential investor has been an active buyer, and hence a bit of outperformance in that stock. And the last stock is Embassy Office Space. There was a large block deal, and that's the reason why the stock is under pressure today, 3% down. And I believe one of the leading private equity investor was a seller in today's block. So that disclosure will be important. But as I said, there is selective buying in the mid-cap space, and those stocks are outperforming trade today.
Okay, all right, Nimesh. Thanks as always for that. Just a quick overall sense in terms of what's happening, what's going on. 327, I mean, there is a bit of a back and forth which is happening, so it's not one way. I think we made a fresh low at about 311 or so, and then the market's trying to come back up once again. Fresh low, and then 4 minutes back, and then there is a bit of a rebound which is coming through. Mitesh is with us. Mitesh, first of all, tell us what you're making of it. There was a 70-80 point rebound. It's all but gone. And then what would you want to trade?
Yeah. So, Prashant, I think part of it is gone, yes. I think, the Nifty kind of managed to bounce back. But the Bank Nifty, I think, is still slightly better place than the Nifty. I mean, off the day's low compared to what it was. It was around 40,500. Now it's at about 40,800 or levels. So I think the Bank Nifty is still doing well. And that could lend some strength to the Nifty. But as I said earlier, if we start breaking below 17,500, then a retest of 17,400, 420, which is where the earlier 21-day average was, a lot of hourly pivots were made over there. That should be the minimum. But eventually, this could also lead to 17,150 being revisited. So in that sense, the market structure remains slightly on the negative side. I have, in fact, one STBT on GNFC. It's further moved down, but I think send this one with the stop at about 735 for targets of 705. And a cash stock, Prashant, is breaking on the upside. That's Wonderla. That's a BTST with the stop just below levels of 384 for targets of 400.
Okay, Wonderla, that stock. In fact, ever since this whole pent-up demand came in, I've seen a big move in names like Wonderla. Of course, all the hotel stocks have also surged, but quite a bit of move is what you're seeing in some of these stocks. Look at that move in Wonderla. In 3 months, it's gone up almost 78%. Big moves happening here. Prashant, you visited there over the last 2 months or so?
I've been right here, Anuj. You're the one who's doing all the traveling. Right here, nowhere.
Yeah.
Not even to Magica, which is nearby.
Yeah. Okay. Okay. Anyway, let's move on then. Maybe we should move out a bit more out of our studios and travel a bit more, perhaps. Before we invite our next guest, let's go close to our next guest. Kunj Bansal is joining us. Kunj, hi, good afternoon. Your thoughts on any of these names, Wonderla or even Ad Labs for that matter?
And so we saw that all these businesses went through severe, deep stress in the corona. But more important is even before that, to make good return ratios on these businesses has been difficult. So their ROE, ROC has always been under challenge, and therefore to me they don't look like real good long-term or even medium-term investment bets. Yes, you can buy them in distress, wait for some recovery, which always comes either with the market or some bit of business improvement. Also, the fact that these are seasonal businesses, they do very well in summers, they do very well in school holidays and things like that, and then monsoon it becomes completely 20% of the peak businesses. So to that extent, they don't become a medium to long term investment holding. Yes, they do remain seasonal or trading, maybe quarter to quarter kind of monitorable business.
Absolutely. That's Wonderla for you. Kunj, hi, afternoon. Before I come back to Kunj, let me just quickly play out some sort of opinion we heard from Adrian Movad, who's of course an emerging equity markets specialist, and these are his views on inflation in the US and generally his outlook on India as well. He remains positive emerging markets, especially markets like India. Listen.
The trend is still in place of declining inflation as we go into next year, but we're going to experience these bouts of volatility with each data point. What I think is encouraging, though, is that even with Fed Fund futures now forecasting 13 months out, the Fed Fund rate at 4.25%, that the S&P hasn't sort of retouched its June lows. And my sense is that we're developing a little bit of a scar tissue to these inflation prints. The story here on inflation, yeah, the print was bad, but think ahead. I suspect the inflation prints over the next quarter or so will actually be better. The Indian economy looks very resilient on a global stage. Particularly within emerging markets. And when you look at the emerging market cap, very large percentage is China. China continues to struggle with its zero COVID policy. Then Korea and Taiwan are dominated by large tech companies, which are quite cyclical tech companies in terms of they're in the semiconductor space. So those markets are unattractive. So I think within the EM space, India looks the best place to be for international investors. I struggle a little bit with these central bank liquidity models because we're in a period now of quantitative tightening after a period of quantitative easing. Now, I've been looking at equity markets since '88, and quantitative easing came late in my career, I'd argue, post the global financial crisis. And we had a bit of tapering coming into 2014, but it's only now that we're seeing a meaningful quantitative tightening. So I don't really understand how you can have a model for that because, models are about back testing cycles and you need multiple data points, multiple cycles in order to have a robust model.
Okay, welcome back. We got the market, which is down 2%, well, 355 points lower. How is the week going to look like? That's the other question. It's just going to be down 1.7%, because for the bulk of the week, the market was moving higher. And only today, it's seen this a sharp cut, but just about 1.7 lower for the week. Kunj, of course, is still with us. Kunj, you like auto names, names like Mahindra & Mahindra, Motherson Wiring Systems. I mean, you want to talk us through those names?
Yeah, sure, Prashant. So few things. One, first in the context of market. Now today we have market so sharply down, and over the last few days, if we take from the peak of around 18,000, we are down. So it was hardly till yesterday, day before that, as a whole market was falling over each other to buy these stocks, as if there'll be no tomorrow and when will we get it. So why not take the advantage of such a sharp correction and buy all these stocks are down 3-4% today, and from their peak easily 7-8%. So Mahindra and Mahindra, even at its peak, was on a relative basis cheaper compared to its peers in terms of valuation, P ratio, and we all know the kind of waiting list that they have for different models across their offerings. Now with this correction at about 1250 odd, it has become even more cheaper. So to me it looks like, and also as a general investment philosophy in these kind of market, it's better to get in first in the large cap, because any next recovery, they will be the ones. Still going from the auto to auto ancillary, Motherson Sumi Wiring is the other stock which we all know got demerged from the original Motherson Sumi. Now this is a company which caters to the needs of all the electrical vehicle makers in India as well as abroad. Again, on a valuation basis, it has always been expensive, but it keeps becoming expensive. Again, today it's offering a good correction in the market to buy. So in my view, it's a good time to buy these stocks. Market can come down a little bit. Let's also keep in mind that for auto sector, metal prices have been continuously coming down. In fact, you yourself tweeted few days ago, the oil price has been coming down. We are in the festival season, so demand hopefully should pick up. The secondary market check already shows that. So all things are in place.
All things are in place. By the way, just pull out the intraday chart of Infosys and just look at the heavy duty selling which happened here in the last 30 minutes of trade, and look at the kind of volumes that it generated. Just see that. I think candlesticks perhaps would be a better explainer here, but this selling has come on some very large volumes. It looks like as if someone just wanting to get out of this one. Now, Kunj, is this getting oversold? Would you look to take some bet here, or just avoid it?
I would think so. In market one, so on one hand, for Indian market, we always keep talking about valuations and always remaining expensive and all. And when one gets these kind of opportunity, if one doesn't take advantage, then yes, obviously on every rise, if you want to buy, you will find the valuation expensive. So I would like to play at least partly contra here, and would like to start buying some of these stocks from the IT space, which has corrected sharply. Yes, even in this quarter, September quarter, when we have numbers, margin could be there, which is already well known. It's not that will be a negative surprise. On the other hand, rupee has been coming down, not that they get a very high advantage of the currency depreciation, because clients always renegotiate the rates and take large part of that advantage back with them in the rates that they give. But in a market in which, again, if we see FIIs coming back, they will look for such sectors and stocks wherein there is a valuation correction, wherein there is an underperformance and under participation, and that's where they will come in. Again, with market correction, maybe there can be some more correction, but I would like to play contra here and start buying some of it.
Okay, be contrarian, start buying something here. Kunj, thanks a lot for joining us. Have a good weekend. Let's now start wrapping up the market action for the day. Now, the market was down, but not out. I mean, I'm saying this purely because of the bank Nifty, which is still sort of trying to bat for the bulls. Next week perhaps would be a bigger test, whether the decoupling is still intact or are we in for some kind of recoupling. But the Nifty was down 340 points, and that's mainly because of two sectors, IT and autos. IT in particular, Infosys was down 4%. There was big decline in names like TCS, Wipro, HCL Tech, Tech Mahindra, all of them. And of course the consumption names, actually not just autos, but Tata Consumer was down 5%, Hero MotoCorp was down 4%, Mahindra was down quite a bit, Tata Motors, Nestle, all these stocks down quite a bit. In fact, there were so many stocks down over 3% in Nifty today. Very rarely we have seen that. 16 Nifty stocks were down over 3%. And of course, there were others like Reliance, which was down 2.5%. HDFC was down 2%. So many, Tata Steel, Bajaj Finance, so many stocks down. IndusInd Bank was one of the notable gainers, 52-week high on IndusInd Bank. But Prashant, the broader market, there was a bit of a collapse today.
Market breadth was, 4:1, more than that actually, in favor of declines. So, yeah, I mean, there was a fair bit of pressure. But market breadth and broader markets last few days, even when the market was, making these comebacks from the day's low, it wasn't participating in a very big way or anything. Advanced decline was mostly 1:1 or even in favor of declines. So let me just quickly run through a few names. Vedanta was down 8%. That was a big one with volumes which sold off. There's LG Equipment which comes up right at the top of the list in terms of volumes, down 7%. MRF sold off about 8%, giving back some of those gains we saw yesterday. Schaeffler India was down about 8%. DLF was down 6% in trade. Balkrishna Industries, Astral, both 6% cuts. There was Indiabulls Real Estate, which was down 6%. All Cargo was down about 6%. JK Paper lost 6.5%. There was Timken India, which was down 8%. Vaibhav Global was down 7.5%. And what else? I mean, Equitas, Kansai, Nerolac, Hudco, Imami. I can go down the list, and lots of action as far as names which were down and out. In the broader space, I mean, I would be remiss if I don't mention a few names which were higher because they were. I mean, Bharat Dynamics, for example, 7% higher, 929, big volumes on that one. Mazgaon Dock, I mean, so defense, Mazgaon was up 3.33% higher. So one is Bharat Dynamics, BDL, and the other is Mazgaon Dock. The prices will come up. Ease My Trip was up 6% by close, 416 on Ease My Trip. Karur Vysya was up 7%. So these smaller banks, old private sector banks have been doing well. Sumitomo Chemical, 7% higher. There was Star Health, which was up 3%. Thermax was up about 4% or so. McLeod Russell, out of the blue, 20%. Limit up. Saxoft, Wonderla were some of the other names which looked up. But all in all, I mean, far more losers as compared to gainers. And, I mean, global market pressure finally taking some sheen off the price action that we had today. Well, it's a wrap on this edition on Closing Bell from all of us here. It's goodbye. Thank you very much for staying with us. Don't go anywhere. Our Friday special, Smart Money, comes right up.